Bitcoin went up more than 100% year to date. Is this too late? How far can Bitcoin still rise and what are potential bottoms? We're going to look at on-chain data. So we're not going to just draw random lines on a chart. We're going to look at data that's not available in traditional finance, that's only available in Web3. So the idea is that we are tracking every single Bitcoin. We are tracking every single wallet. And then we can see what are the long-term holders doing? What are the Bitcoin doing that haven't moved for 2, 3, 4, 5 years? Are they now suddenly moving? Are they suddenly selling? When is there a potential heated time when there's a lot of short-term trading happening? And when is it potentially still safe to buy? The first thing we are looking at is the MVRV score. The market value to realized value Z-score. Now there is a measure called the realized value in Bitcoin. There's nothing like this in traditional finance, but with on-chain data we've got this. The realized value is the price at which a Bitcoin moved the last time. So we aggregate all the different Bitcoin that we have and we look at what specific price did it move the last time. Now this is useful because the current price we have in Bitcoin is simply just the last time Bitcoin was traded, right? But when a lot of people are buying up, then the recent price might be higher than the average for what the other people have bought for, right? So we get the average cost basis of everyone. Now why Z-score? Market value to realized value. So the current price versus the average price of everyone else. Z-score means how much does the price on average fluctuate. So if there's currently a lot of volatility in the price, then you want to be okay with higher prices because we might simply just shoot up short term. If the market is relatively calm, then just a little bit of a price increase might already be problematic. So we take the current over or undervaluation compared to the average price in relationship to the volatility, in relationship to the average price movements. So let's look at all of this on this chart. In black, we've simply got the Bitcoin price, a very long-term chart starting in 2010 when Bitcoin was just a few dollars. This goes all the way to today. And then you see this blue line here. This is the realized price. So let's zoom in into the last few years. And you see, sometimes the price is above, sometimes it's below the realized price. Realized price being the average of what everybody bought Bitcoin for. Now on this particular chart, we're not just looking at the price, we're looking at the market cap. So we multiply the circulating amount of Bitcoin by the price, but pretty much it's the same thing. The relationship between those two numbers doesn't change. So the current market cap is at roughly 700 billion. The realized cap is at 405 billion. So taking those two numbers in relation to one another, we got 58%, or in the worst case, a drop of 42% roughly. So Bitcoin very much could fall 42% simply just to get to the average cost basis that we had seen in the past. So nothing is risk-free, right? You could buy Bitcoin today, lose 40%, and it would still be very much in realm of what happened in the past. We had been below this realized cap for quite a while. I don't expect this drop to happen, but when you buy into Bitcoin, you should be okay with volatility. You should have a very long-term time horizon. You should be okay to hold for 3, 4, 5 years. Currently, the momentum looks very bullish with the upcoming Bitcoin ETF approval, but who knows what kind of bearish news could come out. Now we've only looked at the current price and at the realized price. Now this orange line is taking this in relationship to the volatility to tell us when are prices really exaggerated. So that was, for example, at the beginning of 2021 when Bitcoin was at 40 to 50K and didn't rise that much afterwards anymore, right? It went all the way from 3K to 50K, then went sideways, then went down. And we had that peak here in February 2021. Bitcoin's market cap crossing 1 billion. And this is when everybody had their red laser eyes in Twitter. And I still like to use those laser eyes here on this channel. Now we are obviously lower than that, 60% to be exact. And so with the current rise, even though we went more than 100% up year to date, we are very far from this heated price. We are very far from people being that much in profit relative to the volatility that we have to worry about already peaking. There are sometimes temporary drawbacks, right? For example, here in June of 2019. We don't always go all the way to the top, but then you simply can continue to dollar cost average. This is what I did at the time. I only sell during peak hype, and during the rest of the time I continue to dollar cost average into BTC. Next thing, this is the realized HODL ratio. Again, something we don't have in traditional finance. This looks at how many people realized their profit in the last 1 to 2 years relative to the people that realized it in the last 1 to 2 weeks. So when this is very high, a lot of short-term speculation is happening. When this is very low, then a lot of long-term holding is happening. And again, we've got a nice band. This did not peak in the red zone, but went relatively high. It does go to the green area though when we are bottoming. And this did bottom at the end of last year, creeping up again, still relatively far from the tops. In other words, long-term holders are not yet moving their Bitcoin. And we've got different values, different on-chain indicators that support this thesis. Here is one of those indicators. The value days destroyed multiple. Now, what are value days destroyed? If you hold one Bitcoin and you don't sell it for 2 years, and then after 2 years you're moving it, then you're destroying 2 times 365 value days. So a bit over 700 value days are being destroyed once you sell the Bitcoin. In other words, once the value days destroyed is very, very high, it means that the long-term holders are moving their Bitcoin. The people that tend to just dollar cost average into the asset, they give supply to the market, to all that hype, to all the media attention that is now very likely during these times promoting Bitcoin, right? Whenever Bitcoin hits new all-time highs, supply gets very, very tight. New people enter the space. Then the long-term holders tend to offload because they have to rebalance their portfolios, right? When Bitcoin suddenly goes 3, 4, 5x, suddenly you've got way more Bitcoin in your portfolio than you are really happy with, right? You don't want to have that much risk potentially in your portfolio. And so you get rebalancings. People that then hold all these dollar values in Bitcoin might sell some of their BTC to push it maybe to property or to push it to simply stocks. Again, here we are not yet in the red zone. And again, this did peak at the beginning of 2021 when Bitcoin didn't rise that far anymore. I expect, again, a peak once we hit new all-time highs in Bitcoin. Once Bitcoin goes to 70, 80, 90K, then probably we also see this value days destroyed multiple go up. And that's then the time to really offload hard. You can also supply adjust this, so that's the same kind of graph. Here the bottoms align a little bit better, and again we are very, very low here. There's also a chart that estimates potential price bottoms, again with value days destroyed, this time cumulative value days destroyed. According to this model, the bottom of Bitcoin is at 17K. So again, our 40-50% potential drop. This had been in the past a pretty good floor indicator. $17,349 is currently the bottom according to this model. No model is perfect, but always when things tended to work in the past, they're at least a good gauge where there are potential very good buying opportunities. I'm not saying to wait until we hit this again, but it is a good measuring stick if you, for example, plan to slightly lever up your Bitcoin, right? For example, having a 1.2, 1.3 leverage on Bitcoin might not be too bad if the maximum drop that you're expecting is 60%. You can lever up with 1.2 and still not get liquidated. Again, only do this if you can stomach the volatility, right? Bitcoin is already volatile. Levering this up is even more volatile. What are potential tops? Another interesting model, the terminal price. By the way, all of these charts come from lookintobitcoin.com. Simply search for this within Google. The terminal price is also calculated based on the coin days destroyed, which is currently at $111,888. So Bitcoin could do a 3x and it could do a minus 50%. Still good risk versus reward, but definitely not something where you're getting rich overnight. You do need a proper allocation. We sometimes did overshoot this limit, but not for long. Over here, we moved from 11K all the way to 20K, then came back down. Over here, we hit this once at 42K, then went all the way up to 69K, then came back down. So again, this doesn't have to be the absolute top, but it's probably a good region to start offloading quite a bit. Now, why do we see all of these long-term Bitcoin price appreciations? Is there really more activity happening on the Bitcoin network? The answer is no. The number of active addresses is actually pretty flat. Look at this chart over here. Number of active addresses. It's actually lower today than it was during the peak of 2017. Bitcoin reached here 20K, and now we are of course above that. So the price can appreciate while the number of transactions or the number of active wallets doesn't appreciate. Now, what number does go up though? It's the number of wallets that hold at least one Bitcoin. So more and more people are simply just dollar cost averaging into Bitcoin and hold it over the long term. The reason why Bitcoin goes up over the years is not because people are speculating on this more and more. It's because more and more people hold it and don't sell it. We don't need more activity. We need more holders over time. And this is increasing very, very consistently. When this orange line, the number of wallets that hold at least one Bitcoin, starts to drop massively, then I also get scared. Then I will also offload quite some Bitcoin. I don't see this coming though. This is a very steady long-term trend. Adoption is happening. Adoption is not just a marketing gimmick. It's simply as a store of value. It's not as a speculative asset. And so even though there is the risk of some downside after this massive run year to date, I simply just continue to DCA in. I continue to buy a bit every month until we get really peak hype. I don't offload before that. If you've got Telegram, feel free to join us. The link is down below.